Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Juice. So, with 2021 in the rearview mirror, we decided to rev up our engine and make a few predictions for 2022. First up, we think that treasuries are going to get pummeled. Now, somehow, debt markets continue to shrug off impending rate hikes, but that won't last forever. Once the actual rate hikes come into view, we expect them to take things more seriously. Our suspicion is that some money believes Omicron will dampen demand and lessen the inflationary blow. That doesn't seem likely with so many price increases set to drop on the 1st. But even if we're wrong about treasuries dropping like a stone, the upside to owning them just isn't that great. Next up, we think banks are going to win big. Banks haven't seen an environment this favorable in a very long time. We're especially bullish on regional banks that make loans to industrial and agricultural customers. While we thought this sector would have risen by now, it remains historically cheap. Heck, even big banks like Citigroup look darn good. Our third prediction is that tech splits in two. Technology stocks continued to perform this year. However, it wasn't the same as 2020. We began to see a split between the high growth and current earnings companies such as Apple performing, while Snap fell hard. As rates rise, companies with heavy debt load will face higher interest expenses. Plus, the opportunity cost increases for investors. So, to keep the same share price, companies will need to earn more sooner. Our final prediction is that investors will earn muted returns with increased volatility. And after 2 incredible years of market returns, it's unlikely next year comes close. That said, the amount of uncertainty coupled with the high level of retail participation says we should expect more market volatility and price swings. This shouldn't come as any surprise. But unless you've lived through it before, and 2020 was not it, then it can throw you for a bit of a loop. So, these are our final thoughts. Evaluate each investment or trade on its own merits. Don't compare it to others in your portfolio unless its expressed purpose is to act as a hedge or offset to another position. And use volatility to your advantage and pick up stocks you want at the prices you want them. There are plenty of good companies out there. There is no reason to chase down a stock. However, if you believe in a company, don't let price swings shake you out either. If you want to own Tesla, then own Tesla. You can always own less if you are uncomfortable. That's all we have time for today on The Juice. Click, follow, and subscribe to The Juice email for your daily dose of market minerals.